Dear clients, I'm Richard, Assistant Dealing Manager from Phillip CFD. Last week, US equity market risk-on momentum took a pause as anticipated, with investors adopting a wait-and-see approach going into the US 1Q16 earnings season, which is due to be kicked off unofficially by Alcoa tonight on 11th of April. Hawkish comments from Fed policy speakers, as well as skepticism over oil production freeze-thaw early in the week, also put market on the back pedal. Hence, the major benchmarks, namely Dow Jones Industrial Average, S&P 500, and Nasdaq Composite, all suffered a modest weekly loss of 1.2%, 1.2% and 1.3% respectively in the opening week of April, following a solid March rally. In terms of US economic calendar, it was a relatively light week and therefore investors appear to be paying more attention to several Fed speakers' comments and speeches throughout the week. For instance, US equity market apparently traded lower after being surprised by hawkish comments from Boston Fed President Eric Rosengren at the start of the week, while an easier tone from Fed Chair Janet Yellen and New York Fed Chair William Dudley late in the week seems to have provided some cheers for the market. However, one noteworthy interpretation from the cross-market action perspective is as follows. On the one hand, a drop in 10-year Treasury yield late in the week may suggest that investors do believe Fed promises to move slowly. Nonetheless, on the other hand, investors' anxiety continues to rise rapidly, which is indicative of looming market uncertainty. This is reflected by VIX, a widely watched fear gauge, which spiked more than 28% to near 16.7 on last Thursday, from the 13th handle since the start of this month. Looking ahead, market is likely to remain skittish, as it may take a while to figure out how investor sentiment shapes up in the face of an expected fourth consecutive quarter of year-on-year decline in the S&P 500 earnings, according to FactSet. Clients may consider using Phillip CFD to trade equities and indexes across markets to capitalize on trading opportunities in both rising and falling markets. This is all for today, and hope to see you soon in our next round of market commentary. Thanks for watching.